All right, yo, yo, yo. It is December 29th. I'm going to do a little recap. It was the last trading day of the year today. It was a pretty good Friday. Nothing really crazy. Was not expecting much given Friday because, as you can see right here, we were just kind of chopping around. We weren't getting any clean movement until about, what was this, about 9:30ish. That we got a nice little dump down to my intended draw for the morning at 17.05550. Uh, Obviously, we did displace a lot farther down, but I kind of want to go over the couple setups that I like today. This was the one I tweeted out that I said I liked this specific time, and kind of why I liked it is this yellow box right here it's a 15-minute fair value gap that we displaced up into. So once we got up into that, I was not seeking any longs. Obviously, we had one right here that would have been a TP break even, as it went, I believe, 9 points before reversing and coming back to break even, but right after, obviously, we had this little swing low right here that we displaced under. We could draw our fair value gap with our gom box and set a limit at the bottom yellow line. As you can see, this one did dig a little bit up, take out some liquidity, went 6.75 points before reversing and coming down 16.5 points. So it would have hit two targets, almost reaching the 18 points, but realistically, if you're trading smart, you could have probably pulled some off down at this level or just let it run back and stop you at break even. But obviously, like I said, overall, I was carrying more so a bearish bias, and keeping that in mind, I kind of figured that bearish scalp setups are going to be the highest probable setups. And this was the second one I was kind of eyeing. Not too, like, obviously, personally, I wouldn't take it because these equal highs. This is something I'm trying to build a little bit more data on. Just as we displace away from those, because usually when we have choppy conditions, we're going to leave a lot of these. And like I said, that's just something I'm trying to figure out. But obviously, right over here, you can see at 9:30, we got a clean, sharp move down. We did leave some equal highs here, but it was into a fair value gap, which I've seen at least the past couple, about month or so, is when we leave equal highs in a fair value gap, and kind of disregard those. They aren't, or they don't hold as much importance as something like this. But obviously, as you can see, we just absolutely melted down, and we got a clean little setup right here at 9:47, or I believe this may be this. I think this was a 30-second play. I'll bump up real quick and show y'all because yeah, it was a clean little 30-second play. Obviously, right here we mitigated, or not mitigated, but repriced off of that fair value gap, displaced down again. And I do want to kind of note that if you're keeping liquidity points in mind, this 17.022.550 was a key liquidity. I think it was a session low, a PM low, if I believe right. So kind of keeping that in mind. As you can see right here, we bottom ticked it, didn't quite sweep it, and we came up and would have been tagged in right there before this absolutely melted. This one did go 18 points, so that's something to keep in mind. And then actually, I kind of want to go back a little bit. This is, like I said, this is not necessary. I do this personally to kind of get a little bit more framework in mind, especially when we're just melting down like this, because it allows me to identify areas where I should engage and should not. Right now, what I'm talking about is standard deviation projection. So right here on a higher time frame, we can identify this little leg right here is our manipulation leg up into this 15-minute fair value gap. And I kind of want to show you the how precise this is. So obviously at the -2, -2.5 standard deviation, we can expect a possible reversal to happen. As you can see, we did come down into that and started to trade back up. We came back into an inefficiency. This is probably on like the 1 or 2 minute. This is probably a full fair value gap right here. But we did start to creep above this 1 minute. That's why I was interested in a possible long setup off of there. But as you can see, we did just melt down. And when we close, this is something that's I'm not sure a lot of people know about. I know it's kind of floated around the space. But when we trade through the -2, -2.5 standard deviation with speed, with clean displacement, we can expect it to act as resistance and take us down to the -4 standard deviation. I'll show you here in a second how precise this is. It's actually pretty cool. Like I said, don't necessarily need it. I personally like using it because it just works for me. So I kind of want to get to that little long setup right here. So like I said, we were creeping up above this 1 minute fair value gap right here. That's what I use as my high time frame structure. We did get a clean close even on the 1 minute, right about there. But right here we would have had a little scalp long setup. This one did end up going only 6 points before reversing. It would have stopped us at break even, but obviously we would have displaced above this high right here, and no equal lows down here, and would have been tagged in. No, this was a 30. I keep mixing these up. Oh, I think that was a 30-second. But besides the point, like I was saying, what can we expect when we trade through the -2, -2.5 standard deviation is it to act as resistance and take us down to -4. So what I've done here is I've drawn a line over here and drew it out. So what I like to do is use these standard deviations. Think of them as like kind of like liquidity points. They're going to be magnets for price, right? As you can see right here, we did get a clean little scalp setup right here. Obviously, we repriced off of this fair value gap right here, filled it completely, and then displaced down. And it took this low right here, displaced through it with some speed, would have been tagged in right there. And then this one did end up going. It would have almost hit 12, not quite, and then would have came up and stopped us at break even. Or if you want some manual intervention, you could wait and hold for this 4 standard deviation, which you can see precision right there. So usually what we can identify with, actually we're kind of, oh my gosh, this is perfect. This is so perfect. So some more sauce. I know Justin talks about this a lot. When we reach the 4 standard deviation of a range, we expect a retracement to the 50% level. This is the first time I looked at it. I was going to send a tweet out that I was eyeing the 17.02250 level. But like I said, this is the first time I've seen it, like coming back from when I saw us bounce off the 4 standard deviation. But like I said, this is not necessary. But if you want to be as precise as possible, I would recommend using standard deviations because, all right, right here, -4, this yellow line. So we tapped it. What did we go down past it? So right here we are at 14.5, 2 ticks. So 50 cents on NQ, right? On something that's currently, or at that time, $16,938.75, right? 50 cents is nothing for that. So besides the point, what can we expect after the 4 standard deviation is met is a retracement to 50% of the range. This yellow line right here is 50% of the range. Look at that precision. And I'll actually draw it out real quick because I believe, so this, I'll just double check real quick. Let me go up to the 1 minute. Like I said, not that this really completely matters, but like I said, I do use standard deviations to get a better sense on framework. Yeah, it's perfectly in a line, basically, right there. That white line with this yellow line. 50% of range really does not get more precise for that. The reason I'm saying standard deviations is because you know when to more so engage in the highest probable setups. Obviously, if we're going to be moving back up to 50% of the range, it's a bullish move. We're going up. So the highest probability ones that are going to yield the most points are going to be bullish scalp setups. But besides the point, those were really the only key ones. This is the only one, if I was trading live today with live funds, this is the only one I would have taken. This is the only one I had high conviction on, just because we were repricing off a 15-minute fair value gap, and overall my draw was bearish. And as you can see, this was the only one that had the deepest pull besides that 30-second setup. But I just wanted to make a quick video. Didn't want to make this too long because today was meh. It wasn't really that great, but overall there were some really, like, this is really good PA to study. Even though it is a slower week, low volatility, like with all the, especially with the equal highs and the equal lows, I believe there was one, I want to find it. Yeah, just so people, I see some people saying that they don't want to count these as equal highs. Just honestly, just listen to me, because I have the data that points that these, when we put these in, there's a very high likelihood that we're going to get a draw to them and they're going to get swept. I more so would much rather see a bullish scalp setup to take these out than to be taking a bearish scalp with these right above me. To me, it's a suicide mission. You don't want to be doing that. But besides the point, those were the key ones I wanted to cover. This was some really good price action to study and kind of understand. Like I said, I'm not trying to make this too complicated for y'all. I do use quite a bit of other stuff, obviously, because I am an ICT trader. I like to be about as precise as possible with my entries and exits. I'm very, very picky. I'm not just going to be taking everything and anything. I have to have a reason, and I have to have conviction behind my entries. So that's kind of just what I wanted to point out. I did not want to incorporate this standard deviation stuff at the beginning. Like I said, it's not necessary, but if you want to be about as precise as possible, this paired with 1 minute structure is bread and butter. But if you have any questions, per usual, just shoot me a message on Twitter or leave a comment in the comment section, and I will try to answer it as quick as possible and kind of go from there. So actually, I think I was saying that earlier. Something I want to know, because I had some people ask me questions about like when we have equal highs put in like right here, because obviously, like I say, I wait, but when price is spooling as such, when we're displacing this much with speed, there's very, very low probability that we are going to come up and retrace into these. I more so really, really care about these when we are in a ranging market like this. When we have these, I'm expecting these to act as magnets. But when price begins spooling, which is just moving with speed, fast, quick reactions, quick retracements back into inefficiencies so it can deliver as clean as possible, this is kind of what I want to explain, because like I said, a lot of people had questions about it. I care more so about these when we are in ranging markets. When we're just displacing with speed, that's kind of when I kind of lean off of them and more so not care about it. But I hope that kind of answers that question. Like I said, if you have more, just let me know. I'll catch you on the next vid. Peace.